All righty. So while we're waiting for others to join, those that were on last week had a challenge. Do we remember what that challenge was? And who was able to accomplish it? As I recall, and correct me if I'm wrong, we challenged you to do one new client appointment and add 5 new contacts to your database. Was anyone able to do that? We got one hand up. Maria's shaking her head. Yeah. Very good. Luke, nice job.
I had the 5, Jodi, and then one of them is hopefully gonna be like a listing appointment. I'm still working on it.
Good job. Awesome. Hi, Chris. Welcome.
Thanks. Glad to be here.
Did you get the second email, obviously, with the correct link? Martin said he couldn't get in the first one.
I did, and I couldn't either, but I'm obviously in now, so the second one worked.
Okay. Oh, good. Here comes Martin. So hopefully everybody got that email. He called. So, oh, good. Here's Oliver. All right. Yay. Lots of people on today. Very, very happy to see everyone. Those of you that don't have cameras on, if you can turn them on, please, we would really appreciate that. Yay. Thank you. We understand if you have a certain circumstance, but remember, how you show up here is how you show up everywhere. Remember that bold law? So when you come to an important class, and especially group coaching and this one, we want cameras on. Because remember, if you're in the actual market center, you don't walk in the room with a bag over your head, right? All righty. So let's get rolling. We have some special guests today. We're excited to bring you Motif Mortgage, and I think we still have people getting on here. So what we wanted to do today is accomplish a couple of things. One, we've been talking about how we've had the addition of Motif Mortgage in all the market centers now. And we really want everybody to reach out to your local lender and have an appointment with them if you haven't already, and see how they can help you. And today, not only do we have all of the local lenders in the individual offices, but we also have some of the muscle behind the muscle, right? We have Chris and Oliver who are here as well to explain how Motif came about, why we're doing this, and how they can help you and your clients. And then we're going to let each of the loan officers introduce themselves and say what market center they're in. And then whatever questions you guys have for them, throw at them. So you can either, when they're done, unmute and ask, put it in the chat, because we want to mastermind today around, in this current market, what is best practice in working with your buyers and sellers in the lending arena. Okay. So, Chris, Oliver, who wants to start us off?
Yeah, I'll go ahead. Thanks everyone for showing up. So Motif and Keller started a joint venture to provide in-house lending services. We are, based in San Luis Obispo, California. I'm sure you're all in California, obviously, but in San Luis Obispo, all of our operations are here: our underwriting, processing, docs, funding. We're a mortgage bank here in San Luis Obispo. So Pacific Trust Mortgage essentially is the partner of Motif Mortgage. Chris and I have been with Pacific Trust Mortgage since 2004 and 5 respectively. The bank has been here for 20 years. So we're a direct correspondent lender. And Motif would be sending all of their business for the most part through our channel to Pacific Trust Mortgage here in San Luis Obispo. We have our own appraisal panel, which is totally compliant, which allows you and your markets to have appraisers that you like to work with on your appraisal panel, so that you're not having appraisers come in from out of the area and they're familiar with your areas and your properties, which is a pretty big advantage, and not using one of the national appraisal management companies, which tends to send an appraiser from out of the area and into your market, and sometimes causes issues, especially in this rising price and rate environment. And there are challenges there. So that's a pretty big advantage. We don't have, tons of management in between the owner of our company and myself. It's basically Chad Van Til, who owns the company. Chris and I are managers. And so when there's an issue that comes up with a transaction, we have the ability to make some risk calls. If we know we have a loan that we can get done and get it done, as opposed to just declining a loan, where a lot of banks will do that for risk purposes. And that's a huge advantage as well. Do you want to add anything, Chris?
Yeah, I would encourage everyone on the call to Google Pacific Trust Mortgage. That's our company, like Oliver mentioned. We've been around for a really long time. And so we've kind of withstood the ups and downs of 2008 and the good times, obviously, as well. Another advantage is just kind of product. I mean, our product here at Pacific Trust Mortgage, I don't know another company that has access to more product than we do, from your kind of standard conforming, Fannie Mae, Freddie Mac loans, to your government, FHA, VA, to all the breadth of non-QM products, debt coverage, bank statement, asset depletion, 1099 programs, to your private money, to your bridge loans, to a portfolio product. I mean, really, the loan officers are going to just be able to, we're a one-stop shop for the Motif loan officer, basically. So they can come to us, they can come to Oliver and I for guidance, for file structuring, for problem solving. It's really just kind of a one-stop, advantage there for them. So everything is consolidated. They're not going, from bouncing around from giant lender A to giant lender B and trying to figure out their systems. So I mean, product wise, that's a huge advantage that we have here. But again, I would, if you have a couple of minutes, just Google Pacific Trust Mortgage online, so you can kind of familiarize yourself with our company and see what we have to offer there. Because really, Motif and Pacific Trust Mortgage are going to be we're going to have a real strong partnership there together. Does anybody have any questions for Oliver or I?
I have a quick question. Do you handle 1031 exchanges, or that has to go through a 1031 company?
No, yeah, absolutely. We do lots of 1031 loans.
Can you put your contact information in the chat, please?
Sure. Yeah, absolutely.
They can do that. And Adina, all of their contact information is in your individual Market Center folder in the PC toolkit on the Who's Who document. So you can get a hold of any of them there.
Thank you.
Any other questions for us?
Do you guys have some kind of programs also, for first responders? Do you do this type of things too?
Not really, no. I mean, if you Google that, that's kind of usually that's done, I believe, through some of the larger banks. So no, we don't.
Okay.
So Chris, Oliver, do you have something that would compare to that? Because I heard the other day that that was an issue with somebody looking for that specifically. So what would you have that could compare to that?
We don't honestly have any like first responder programs at all. I mean, so candidly, that's not really in our wheelhouse. So I wouldn't want to say that we have something that's comparable to that, because we don't.
Okay.
So Chris, I have a question. I just had an escrow where Chase Bank was trying to do a loan, and they came back and they said that they had their own appraiser go out and appraise the unit, which actually the appraisal came in over over what we were paying for the unit. And the Chase said, no, we disagree with that. So why would they do that? It's their own appraiser.
Chase disagreed with the appraiser?
Yeah. Or the appraisal. They just didn't think that was a good appraisal, I guess.
Yeah, I mean, as we probably a lot of you on this call know, I don't ever want to disparage any other lenders, but I mean, the larger banks are slightly notorious for that sort of thing, and that's mainly because they don't specialize in mortgages. When something like that happens here, we run the appraisal through the Fannie Freddie kind of automated system, and then it spits back kind of what their ranking of the appraisal is. So I could assume that they probably did a similar thing and didn't like the ranking, and then kind of just killed it from there, rather than when that happens with us, what we do is we huddle together with our underwriter, our underwriting manager, and our, sometimes even the president of our company, because he comes from a sales background as well. We evaluate the appraisal, look at the comps. Maybe we'll pull some more comps that will strengthen the appraisal, sorry, and then we'll rerun it through that automated system. And typically what'll happen is it'll give it a higher score if we pull more data into that appraisal. So rather than just kind of killing the appraisal right there, we strategize and come up with solutions there. Worst case, sometimes what we can do is order a desk review to kind of confirm the value of the appraisal, or maybe even a field review and have somebody drive out there and just kind of confirm the value. But again, I can't really speak to what Chase was doing there, but that's my guess. And that's kind of typical with the larger institutions like that. Whereas we'll get together and figure something out, more of a solution oriented thing for you guys.
Yeah.
Chris, can I add to that, please?
Sure.
Thank you. So I just wanted to bring up the fact that a lot of the banks will just use whoever they want for an appraiser. They put it out on an ordered basis, and whoever accepts the order takes it. So not knowing the quality of the appraiser or the quality of the information that was provided, that is a reason that an underwriter may have come back and said they didn't like the value of the property. We have hand-selected appraisers that are on our panel, so we know who we're using and we know the quality of the appraisers that are being used. And we will obviously go over all of that information and try to make sure that everything is accurate as well. So that way, when it goes to underwriting, it's already pre-reviewed. And this way, underwriting's going to get something that should be an already decent appraisal. So just keep that in mind from us as well.
Yeah, that's a great point. So to elaborate on that, I mean, just logistically with some of the larger lenders out there, the banks and things, they contract out these very large AMCs, appraisal management companies, and then they just arbitrarily will have an appraiser assigned to the loan or the escrow. And like Martin said, I mean, that can be an appraiser that is completely unfamiliar. It could be somebody from out of the area, somebody who's unfamiliar with just even the niche of that particular neighborhood, because every neighborhood has different, strengths and weaknesses to them. Whereas we compliantly, of course, hand select our appraisers on our panel, or deselect them if we have somebody who's not really doing a good job and carrying their weight. So that's a huge advantage that we have. And Martin, I appreciate you bringing that up, because that's a great point.
And typically, how long do you need to, for escrow? How long do you need? Is the 17 days okay? Or would you rather do 21 days? Is 14 okay? Because sometimes it depends on
these days with volume where it is, I would highly encourage shorter escrows, because we can get them done pretty quickly. But I mean, even when during busier times, I mean, our operations team is phenomenal, and we can accommodate your escrows, whether that's whatever it is to get your deal in the door. It's going to strengthen your offer if you say, hey Martin, can we do a 15-day close? As long as there's nothing crazy about the deal, yeah, absolutely, we can get them done for you super quick, particularly in this kind of slower environment right now.
And it's the same for refinancing or a home purchase?
Yeah, I mean, either way, refi could probably even be quicker. We're not doing a ton of refis right now, but yeah, I mean, either way, whether it's a refi or a purchase, you name it, essentially at this point, we can get it done for you as quickly as you need us to.
Awesome. And when in doubt, if you're trying to lessen the inspection periods, the appraisal periods, just reach out to the loan officer and double check with them. But that's great to know, Chris, because that is often one of the hangups. Is that's what makes everything take longer, is other institutions don't get the appraisal done in a timely manner.
Right.
So let's take a minute and have each of the loan officers that are on the call introduce themselves and say what market center you are largely working with and how you can help, because the agents on this call, some of them are brand new and some of them are not new at all. And so we have all different times in the business and expertise in here. So please explain how you can help, particularly a newer agent, but any of them.
Well, can I go first?
Sure.
There you go. So hi, everybody. Good morning. My name is Martin Rosenblum, and I handle the West Ventura County offices. So we handle the Ojai, Camarillo, Ventura, and Oxnard offices. And I've been doing this for 37 years, so I'd like to think I'm somewhat good at what I do. And what I bring to the table for all of you is I like to help educate. I like to provide a lot of information. So I would love to have the opportunity to work for those of you who are in my market center to be able to go over everything with you, give you a better idea as to what the mortgage lending process may be and how we can best work together in being able to accomplish getting your clients pre-approved for a loan. So we're here to help in any way that we can. And we also work evenings and weekends and holidays. So we're not the 9-to-5ers and we're not closed on weekends. So keep in mind that we're available to you anytime that you are. So do not hesitate to call us in the evenings or weekends and even the holidays. And my computer goes with me on vacation. So I'm here to help you guys in any way that I can. And that's what we're here for.
Thank you, Martin.
And I'll step in here if you don't mind. My name is Tyler Sturgill, and I'm with Motif. I'm working the Central Coast market from Santa Maria all the way up to Paso Robles. Up in Paso Robles today and enjoying the beautiful weather. Talking about Motif a little bit more, one of the things we do take pride in is just the overall efficiency with our company. Not just the local panel of appraisers that know our market so well, but we also have an in-house team of underwriters and loan processors that have a direct interest in making sure that our products are processed and underwritten in a very timely manner, just to ensure a smooth close of escrow. And also all of our loan funds are funded from in-house credit line, which just another way of contributing to a smooth close of escrow for our clients, just to ensure that everything works smoothly. So it's something we do take a lot of pride in. And I'll make sure that my contact information is available so I can help you guys anytime.
Thank you, Tyler.
Got it.
Hey, Jodi, Ron Notter here.
Hey,
Although
Ron.
you can't tell because my camera doesn't seem to work this morning. I don't know why, but I'm on the call and I wanted to say hi to everybody. I'm in Paso Robles, but I've spent the last 24 years in the mortgage business in San Luis Obispo, Arroyo Grande, and North County. Have a large variety of experience from construction lending to reverse mortgages, as well as the bread and butter purchases and refis. And I'm available for open houses, putting together flyers for potential buyers, educating buyers on what their home buying journey is going to look like with figures and things. I used to teach at Cal Poly in the engineering department. So send me your nitpicky clients that want to go over every single dollar. I'm good at talking to those folks.
Thank you, Ron. Gary, I see you on here.
Yes. Hi, how's it going?
Good.
Good. So yes, Gary Anderson with Chief Mortgage. I'm here in the Tulare County office. I specialize with first-time home buyers. So a lot of newer agents get those type of clients, and even, established agents. So I'm good at, explaining the process, helping them figure out where they stand. A lot of them have questions like, I'm not sure if I can get into a house now, or in 6 months. I go over what they need as far as to pay off debts, fix their credits, how much money they need to save, what they can look for, especially in the market shifting. I actually had a deal where you could get a seller credit. That was something a few months ago. It was don't even ask type of situation because you're not going to get it. And, so just educating them on what's currently happening, how they can get into a home, and really just explain the process to them. So that's where I benefit. That's all I have. Yeah.
Thank you, Gary. Martin, I know you have talked several times, as particularly to the West Ventura group. So would you mind quickly explaining what you have been recommending currently with instead of sellers doing a price reduction? You know what I'm talking about?
Yes, I do. So thank you for that. So yeah, so all of us here have the ability to do this. So basically what we've been trying to promote is instead of reducing the price of the home, which obviously will lower a little bit of a buyer's potential payment, but what we're trying to do is try to save the seller some money as well by not having to reduce too greatly, but being able to offer a credit for closing costs to go towards a rate buy down. So rather than doing a price reduction, let's do an interest rate reduction, especially right now in today's market, to be able to lower that interest rate, because a lower interest rate will give your buyer a much greater benefit or lower payment than a price reduction will. So this way, we're just trying to bring all parties to the table to negotiate appropriately for all, and to be able to save everybody, sellers and buyers, as much in the transaction as possible, and giving the buyers the ability to be able to better afford and more comfortably qualify for their mortgage as well by getting a lower interest rate.
Thank you. That's definitely a win-win negotiation. We talk about that all the time. So that benefits both sides. So does anybody have, oh, go ahead.
Sorry, I have a question about that. Martin, is that buy down option, is it for like the life of the loan, or because I've heard some people mention that it's only for like the first 2 years of the loan and stuff like that?
It's a great question.
Does it
So
vary?
there's two types of buy downs. There's a permanent buy down and there's a temporary buy down, typically what you're referring to as the 2-1 buy down. So there are advantages and disadvantages to both sides. A lot of it just depends on what the needs of the buyer may be and whether or not they want something on more on a permanent basis. Or I've had buyers now talking about the possibilities of just having a lower interest rate for the short term because they can refinance somewhere down the line. Obviously, there's no guarantees of when those rates are going to go down or if it's going to be advantageous to refi or not. But some of the buyers too may have a little bit more of an income crunch where they're going to be promoted in a year or two and can better afford the payments when they go up to the note rate. So again, there's advantages and different advantages to both sides. And it's just a matter of educating the buyers to let them decide which one they would prefer to go with.
Okay, and they would get that information from you first. Ideally, it would be to get that information first. That way, when they see a property and they're interested in making an offer, then that request would be made when we make the offer. Right?
Correct. From the buyer standpoint, yes. We'll let them know what the buy down may cost, either for the 2-1 or the permanent buy down, and then they can negotiate accordingly with their sellers when they go to present an offer.
Okay, thank you so much.
Martin, can you give us an example how much, let's say 3,000 credit toward the interest rate, what kind of decrease on the interest rate would be?
Okay, so great question. So typically buy downs are going to cost a little bit more than a couple thousand or $3,000, but keep in mind too that the dollar amount is based on a percentage of the loan amount. So depending on how much of a credit we can negotiate with a seller, we can use any or all towards that interest rate buy down. The larger the credit, the lower the interest rate. So with a $3,000 credit, let's just say that might be a 0.5 point on a loan. So that may buy the interest rate down 1/8 or 1/4%, maybe. So a larger credit can further buy down that interest rate to further reduce the payment for the benefit of the buyer. So we can help the buyers negotiate effectively with their seller to try to negotiate whatever credit we're able to obtain to buy down that rate. And whatever dollar amount we get, we can then appropriate that to whatever the cost of that buy down may be to the interest rate that's affordable based on that credit.
Thank you.
Is there a maximum amount?
Great question. Technically, yes. As far as a dollar amount, not really, because again, it's based on a percentage of whatever the loan amount may be. So when we're doing loans, we have to stay within certain limits. Otherwise, they can be termed as what's called a high cost loan. And we have to stay away from that. So typically we try to stay within maybe that 2.25%, sometimes can go a little bit higher on the points. But if you're looking at, let's just say, even a $500,000 mortgage, 2% would be a $10,000 credit. So we're trying to stay within a certain percentage realm of not exceeding too far into what's called a high cost mortgage.
Okay. Yeah, because I'm just thinking like, would somebody be able to say, okay, well then I'll just pay it. I'll pay, I want to have 6% and right now it's 8%. I want to buy my own rate down. Can they do that?
That could be a little expensive to buy down 2% fully in the interest rate. Most of the buy downs that I'm seeing right now with a 2 to 2.25 point buy down cost would probably get the buyer about a point reduction or a percent reduction in the interest rate. So if we're hovering around 7 right now, you're probably going to be able to buy down to 6. Again, it can be a little bit of a variable depending on how the loans are priced and the day we're locking in on.
Is there, sorry, I have so many questions.
Okay.
Is there a place where we can see, without like reaching out to you guys, is there a place where we can see what your guys' current rates are at right now? Because that's a question that, like I said, as first time buyers, people always want to know right away, what's my payment going to be? And I'm like,
Right.
wow, well, it takes a lot to be able to tell them, you know, what their payment can be. It depends on their interest rate. It depends on the, you know, everything. So is there a place where we can see what current rates are?
Unfortunately, no, we have to be careful with that only because with today's volatility, rates are all over the place right now and they're bouncing around almost on a daily basis. And we also have to be careful too, because when we're quoting rates, it all depends on, are we doing conventional? Are we doing government loans? Are we doing a jumbo loan? What are the credit scores? What are the down payments? There's so many variables that come into play when quoting rates. So my suggestion there would be is to just simply have your client give us a call, or better yet, give us their name and phone number. We will call them so that way you know the call's being made. And this way we can now talk to that buyer, gather a little bit of information and accurately quote them interest rates for their particular situation.
Okay.
Yeah, this is a great way for you to introduce your clients to the lenders if you haven't already done that, and really show that you are working together as a team. Because even as solo agents, you guys realize you all have a team, right? Your lender, your escrow officer, your inspectors, your coaches. These are all people who are part of your team helping you have successful transactions with your clients. So that's a good reason. Remember, we as real estate agents need to stay in our lane and let the lenders be in their lane, right? And answer all of those questions because they're the lending experts.
Definitely. Just give us a call. I'm here. Tyler is here. Ron is here. I might be missing somebody. Gary is here. So definitely give your loan officer in your market center a call, and we'll be more than happy to go over interest rates and helping your clients getting pre-approved for their mortgages.
And real quick, Chris, I see your hand up, but real quick, I want to go to Gustavo because I see he joined us from Porter Ranch. So Gustavo, please introduce yourself. Obviously, I just said you're in the Porter Ranch Market Center. Let us know what you can do, and then Chris will go to you.
All right, thank you. Yeah, my name is Gustavo. I am in the Porter Ranch office, and I know many of you have seen me there. I'm always here. Feel free to give me a call for any questions. And yeah, I've been licensed for over 10 years, you know, and I'm happy to be with Motif Mortgage. And I think the way the market is and the way that we're pretty much a boutique mortgage right now, when it comes to service and rates, I think we're gonna crush it. So try us out, you'll see. And I'm more than happy to help you and answer any of your questions in the future.
Thank you, Gustavo. Chris, what was your question?
I had a quick question because I had a lender before in another area. Oh, sorry. Hi, Martin. I'm Chris, Central Coast. And he used to give us, you know, we would estimate like $600 a month per $100,000 in home price. I'm assuming that's gone up quite a bit, especially, you know, if we just factor in normal residential neighborhood, around 1% property taxes. Do we have like just an approximate range, like just when we're talking with clients before we do the connection, the referral to the lender, to just give them a ballpark idea within a few parameters of like how much might their total payment be if we consider principal, interest, taxes, everything, insurance? Just like a ballpark per 100,000. Like, is it $700, $800 per 100,000? Like, there's like just a fun kind of idea.
Tough question to answer, only simply because payments can vary depending on price range versus loan amount range. So when you're talking to a client who's looking at a $700,000 home, well, what's my payment going to be? Well, are they putting 5% down or 50% down? And is there going to be mortgage insurance? Is there an HOA? Is it an FHA loan where the mortgage insurance could be more
5% down with PMI. Let's do that. 5% down with PMI, normal suburb house.
So what I'm getting at is, honestly, and I'll be completely honest here, I've never just quoted an approximate payment to somebody, but when they call me and say, well, what's my payment going to be on a $500,000 loan with whatever loan program we're using? I will always calculate, because I like to put pen to paper. I'm still old school, and I will crunch the numbers and go over specific payments with clients and then try to give them options. So I want to be very careful with making sure I'm giving them accurate information and being able to try to keep everything affordable for them as well. So I don't generally speak in generalities. I try to stay away from that if I can. That's
just to give you a little bit of a number. So it's about $700 for every $100,000 you're borrowing, just in principal and interest a month. That's based on just P&I, and then figure about 1.25% of the purchase price for property taxes. Mortgage insurance will certainly vary depending on credit score and down payment, but to figure out how much just the borrowing is, you're roughly $700 a month. That's like a 7.5% interest rate. So maybe less, maybe a little bit more, but that's a good ballpark.
Okay, cool. That's what I've been using. So I wanted to run that by. Thank you, Oliver.
Appreciate no problem. Yeah.
Appreciate that. And I like what Martin's saying though, too. It's dangerous when we start going down that road. We really need to make that connection with the lender, because our approximates could be way off. And it's one thing if they're way off on the high end, because then the client's happy when it's less, right? But if it's way off on the low end, that's a completely different story. Even when we say this is an estimate.
I agree with you, Jodi. I remember, so someone said first time home buyers. I remembered my first home I bought in 2010 in Hawaii, and I was scared, and it was $500,000, and it was more money than I'd ever spent, and I didn't know. And then our realtor, who I wasn't familiar with how it worked, she sat us down and she let us know these are just approximate. And she actually did numbers on page with us. So I like both. I like, Martin, how we go into it with this full disclosure. Like, I cannot give you this is too important of a question for me to ballpark you, but like with them knowing that, kind of like with a contractor, how much is my roof going to cost? Well, I'd have to come out and see it. Well, how much? 20, 10? So thank you, both of you. Well, I appreciate it.
I agree. I just feel like it's kind of hard to because as agents, we don't like getting asked that question, but unfortunately it does get asked. And I don't want to give the answer that I don't know. Or I have to send you to someone else. Yes, I can say I can send you to someone else for a specific answer. But honestly, 9 times out of 10, they want to at least hear a number, like how he's saying. They want to hear a number. So it would be nice to know, how can we give them at least, like you said, a nice estimate? Can we use the number that they just gave right now, the 700 per every 100K, just to give them a ballpark number? Because yesterday I went to an open house, and as I was leaving, somebody asked, how much would it be for a payment for this house? And I didn't get to catch the full answer because I was already on my way out, but she did say, well, come, let me take a look. So I can tell that she was going to provide some type of information. So I would like to be able to somehow know how to, if it is something that I can calculate. That's why I had asked if there's somewhere where we can see what current interest rates are, so that I can try and give, even if it's just a very vague answer. And I will make that disclosure that it's very vague, that they have to follow up with a professional, just so we can give an answer. Because I feel like not giving them an answer is probably not the best thing.
Yeah, you're about 650 to 700. So 700 is probably on the high side right now. 650 if you're buying down the rate for every 100,000 borrowed on a 30-year fixed, fully amortized payment.
And Cindy, to what you just said, sometimes giving an answer isn't always the best practice if we don't know the answer, right? And so I would say, you know what, Cindy, I really appreciate the question. And because I want to give you the best customer service possible, that's going to be to connect you with the lender who can give you an accurate answer. And I am here for all of your real estate needs, and my team member lender is here for your financial needs. And so that's how we want to phrase those things. It's not about we're not helping them, but if we try to answer something that we aren't sure about, then that's not the best customer service, right? So sometimes the best customer service is getting them where they can get the appropriate answer.
Real quick to add too, if you guys just want a rough idea about property taxes, you're roughly $100 per 100,000 in purchase price per month.
Good information. Gary?
Yeah, so I wanted to add that, as an LO and to service the agents, if they plan ahead and let us know if this is a situation where they're not already pre-qualified. Obviously, if I've had someone say, hey, we're gonna look at these properties, what are the payments on them ahead of time? So that way the client knew what the payments were for those houses. So that way they can kind of process that with what they're getting in the house. But we can provide the service as, the loan officer. If you give us a heads up, hey, I'm going to show this person, you haven't seen them yet. Can you give me an idea before I meet with them as far as a payment? We can do that. We have practice files, if you are training files in our Encompass, where we can plug in numbers, give a rough idea, okay, well, this is based off of, maybe a 700 credit score, and just pass that information on, just so you guys can have an idea when you go out there to show these properties, what the payment would be. And that's something that, as an LO, we can provide to you guys as agents. So it's a service that we're here for. So, use us. That way we can, earn your business, earn your trust, and you can see how we work and respond. So.
Thank you. Thank you, Gary. I see a couple more questions, but I want to interject here. What I'm hearing in this conversation, don't forget, guys, as fiduciaries to your clients, you should be starting every relationship with a buyer client with a buyer consultation. And so a lot of these questions that you're asking and worrying about answering, this is part of having that buyer consultation, making sure you're connecting them with the lender before that appointment or during that appointment. And then these are things where this conversation all comes together. Because if you're at a point where clients are asking you about a specific house and what would the payment be on it, and you don't even know if that fits in their price range, we're not quite jiving with what we're supposed to be doing, right? So make sure that that buyer consultation is key. And if a buyer's coming to you and asking a question like that, great question. I would love to talk about that. Go right into your qualifying questions and set that appointment. It's not answering them, it's helping you answer them. Okay. Nina, you had a question in the chat, and then Kathy, I see your hand. Nina, not sure if she missed, how do mortgage brokers charge their fee?
All right, I guess I'll take it. So realistically, our fees were already built into everything that we're quoting to the client. So anytime that we charge, anytime we quote points for whatever the interest rate may be, our fees for our company are built into all of that. So your buyer is not paying anything in additional to have to pay the mortgage loan officer.
Thank you. Kathy?
Hey, excuse me. Jody's still dealing with my escrow nightmare. So sorry. Just for everybody on fees and home payments, I use Martin quite a bit to make my open house flyers. And on those flyers, he gives you about 3 variations, generally a jumbo, FHA, VA loan on your open house flyer. It's co-branded flyer, and it gives approximate payments. It's a really great tool at an open house. It answers those questions at an open house. You say, this is just on these down payments. It's not an exact payment, but it gives you a starting point and an idea of what your home payment might be. So I suggest when you do have an open house, reach out to your local Motif lender, and they can print you up really great flyers with all that information. So it takes a lot of stress and pressure off of you when you have that just to hand to people. But like Jodi said, you do have to give the caveat that these are just estimates, and but it does give you a starting point. So that's just my big suggestion.
Thank you, Kathy. Chris is asking if you have if Motif has a payment estimator tool that they can use or a way to connect online.
We will, as soon as our website is officially up and running, which it should be any day now, there will be a payment calculator on there. In the meantime, if you need something convenient, just go to the Pacific Trust Mortgage website, and there's a payment calculator on there right now.
Thank you. Carlos, let's see if I understand his question. He has another lender he's working with that are currently offering 1K credit towards costs, closing costs, I'm assuming. Does Motif offer or match it, or does Motif sometimes have those promotions? So Carlos, is the lender offering that credit, or is the buyer asking the seller for that credit?
The lender is offering that credit towards closing costs.
Yeah, I mean,
my
we'll always take a look at any sort of competitive quote and try to do our best to match it if we're not already better than that quote. If that makes sense.
To know.
So I was under the impression that, you know, the mortgage lenders go out to a lot of different financial institutions to, you know, figure out what the best rates are, or, you know, terms for loans are. So you guys are just working with one bank. Is that correct?
That's a really good question. So again, Pacific Trust Mortgage is the bank. Yes, we are a direct lender. However, we underwrite to roughly 30 different, what we refer to as conduit investors. So, you know, Chase, Wells Fargo, some of the ones you've heard of, PennyMac, the big ones, and then some smaller niche ones as well. It's about roughly 30 of them. So what I mean by that is when we get a, you know, just when we get a phone call or an inquiry from a client, we evaluate their particular scenario based off their income, credit score, down payment, et cetera. We run it through our pricing engine, and then that pricing engine is going to pull up all 30 of those different investors. Whichever one is priced out the best that they qualify under, obviously we're going to choose that one. So it's not like we're the, if you think of it that way, I mean, we have a lot of options price-wise there. And then we turn around and we underwrite to their guidelines, and we sell the loan to whoever that is. Now, where Motif comes in is they're brokering the loan to us. And so when they broker the loan to us on the back end, that's what we do. We price it out and evaluate which investor is going to have the best pricing. So it's not like we're the, you know, it's us providing the only rate. I mean, there's a lot of different options there, if that makes sense.
And
a little confusing, but yeah.
If I understand correctly, some of you have heard us talk about, you know, the different size boxes that different mortgage lenders have, right? And typically your big banks have the smallest box. And then you have your individual mortgage companies that have a little bit bigger box than the banks. And yet Motif has the big box, right? Because they can do pretty much anything. And so they can source and do what needs to be done for the particular loan. Now, correct me, Chris, Oliver, if I'm talking out of term, but that's how I understand how you're set up, correct?
Yeah, it's you explained it well. So I mean, for instance, a big bank like a Chase only has Chase, right? I mean, and they don't have a ton of product. They just have Chase's product and Chase's rates. A mortgage broker, like a different mortgage broker, a typical mortgage broker will have, you know, they'll broker loans to, you've probably heard of United Wholesale or Flagstar or one of these guys. but they're really, it's a little different because they're sending their loans off to different investors and kind of relinquishing control at that point. Whereas Motif is sending everything through Pacific Trust Mortgage, who in turn has access to all of these different options and investors. So it's kind of like the best of both worlds in the sense that we have control over the loan. We work hand in hand with Motif. The Motif loan officers, they don't have to bounce around and relinquish control of each individual loan to a different large lender who may just kind of kill their deal and say, please move on. I mean, we're gonna, if there's something in that file that's problematic, potentially a bank statement that has a deposit that we don't want to show, something like that, we'll call them, we'll huddle up together with them and our underwriter, and we'll say, hey, you may want to just, let's brainstorm and figure out a way around this type of thing. So, I mean, in a nutshell, I guess the way I would describe it is we have lots of different investor/lender options like a broker does, but unlike a broker, we have complete control over the process. So we're underwriting the loan, we're processing the loan, we're drawing loan documents here, and then we're funding the loan with our own funds. So Motif has all of those advantages kind of wrapped up in one, if that makes sense.
Thank you. And that's really important, guys. One of the reasons that we wanted everybody to be introduced and know about Motif as well, there's a lot of reasons that Albert brought Motif to the market centers, lots of reasons. And they all are about you guys and your business and helping you in your business. And you all know that working with a local lender is one of the best ways to make your offer strong and get it accepted. And on top of that, working with a lender who's right there in-house that you have access to and who is able to do these things. How many of you have had the experience of the 11th hour on a Friday morning and the deal died because something happened that the funder decided they didn't like and we couldn't get funds on time? And it's a third party, so it's, there's no way it's going to happen now before Monday at best. So now, whereas I know we can't guarantee everything, I'm not going to do that to you guys, right? But when you're working with somebody who has everything in-house, that you can't get any better than that. It literally doesn't get better than that because they have control over the entire process. I know Vahida mentioned that some already have lenders you're working with, and we know that, and we respect that. And we respectfully ask you to give Motif a try, because we promise you, I wouldn't bring this to you if I didn't think it was important. I wouldn't bring this to you if I didn't think it was valuable. I think you all know me that well, right? And so I'm bringing this to you, and I made a big deal about getting you here because of the value. Okay, so please give them a try. Martin?
Thank you so much. I just wanted to elaborate a little bit on what Chris had said. So that's so huge for us. Prior to our becoming on board with Pacific Trust Mortgage, we were with another investment partner. And when we were dealing with them as a brokerage, we had to go individually to all of the different companies we can broker loans to. Even though we had the ability to kind of play with rates a little bit, like Chris had stated, it was such a nightmare trying to deal with all of these different companies and their underwriting and their turn times, their processing and everything, their funding departments. So having everything kind of as a niche inside with Pacific Trust Mortgage that we now have, it's an incredibly much better situation for us, giving us the ability to still broker a loan, so to say, having all of these different lending institutions to be able to pick and choose from as far as pricing is concerned. But the most important aspect of all of this is the ability to have our own in-house processing, in-house underwriting, in-house funding, and it gives us the ability to be accountable to you to be able to close things in a timely manner, whereas before we were having troubles with that. So night and day differences being able to work with Pacific Trust Mortgage at this time, and it's giving us a much greater ability to be more accountable to you guys and to your time frames for an escrow period. It's just night and day difference, and I'm so happy to be a part of this right now, and it's made a huge difference for all of us.
Absolutely. And guys, all of the loan officers, and even Chris and Oliver have made commitments to me, to the PC program, to help you help your clients and to really help educate you guys. So not every lender out there is going to do that. How many of you have already had the experience of working with a lender that promised you the moon and didn't deliver? It happens all the time.
Terrible.
So I personally know some of these, and they have every promise I've heard Martin make, he's come through. So that's the type of people that we're dealing with here with Motif, with everyone here that you've met from Motif today. Okay. When they say they're going to do something, they're going to follow through with it. And there's a lot of people out there that'll say what you want to hear to get your business, and then they don't follow through with it. That's why we're bringing them to you. Okay. One of the many reasons we're bringing them to you. Lance had a question. I'm pretty sure I know the answer, but I don't want to ignore it. Obviously, buyers are asking about interest rates getting higher, and we can't predict the future. But is there anything that you guys are hearing rumblings out there in the next month or two about how the year might end?
I can answer this. So, I always kind of go back to this when you hear about the Federal Reserve raising interest rates. It's kind of a common misconception that they're raising like the long-term 30-year fixed rates. What they're doing is raising the short-term home equity line of credit card rates. And the reason that they're doing that is because ultimately they're trying to curb inflation. And as you all know right now, inflation is through the roof. And the one thing of anything that affects long-term 30-year fixed and 15-year fixed mortgage rates negatively is inflation. So the goal is, once inflation starts creeping back down, whether that's 2-3 months from now or a year from now, whenever that may be, the long-term rates will follow that. So it's kind of counterintuitive because the Fed is going to continue to raise the rates. I think they're raising them another 3/4 in November, potentially another half in December. But again, that's your short-term equity line and like credit card rates. But what that should do is reverse this trend of the long-term rates going up eventually. Now, again, I can't tell you when exactly that's going to be, but it should be, I would imagine, within the next, hopefully 6 months, and then the 30-year fixed kind of longer term rates should start dropping back down.
Thank you. Okay, we have just a few more minutes left. Does anyone have another question?
I actually wanted to add to what Carlos had mentioned about a $1,000 credit. So like most things when you're asking about a rate, it's not quite that simple. You won't really know where sometimes that $1,000 can come from lender credit because the rate's higher. Really, if you have a concern about if we're being shopped, I guess is a good way to say it. Really let us look at the pre-loan estimate to really see what match it, look at the same picture, because it's a bigger picture. Loan amount, down payment, scores, there's a lot to factor in. So if you come across something like that, just really give us the opportunity to look at it, try to match as best we can. Obviously we'll work with Chris and Oliver and see what we can do if it's, so just give us the opportunity. Like I said, it's kind of a misconception when someone says that, because you can, in the fees, you can hide that. You can really kind of, we will pay for the appraisal, but we're going to do a lender credit for it. We're going to give you a higher rate, use those funds to pay for the appraisal. And really, it's not really out of our pocket. We're just, there's kind of a manipulation of it. So really let us take a look at it and give you the true story, the true and complete story of what's going on. So that's all I have.
Love that you added that, Gary. Excellent. Any last question? Okay, guys. Well, I want to thank everybody from Motif for taking an hour out of your day to join us today. I think it was very helpful and enlightening to all of us. And we're going to continue to talk about you and express why you are with us now and why it's so important to reach out to you guys. Any last things you guys would like to say?
I just want to say thank you so much because, you know, there's so many parts to our job that, you know, we're not going to know and things that are changing. So it's so nice to have, you know, you guys experts out there to help us. So thank you so much.
Yeah, you're welcome. And also, I would just encourage everybody to call your loan officers because they want you to call them. I mean, it's not a burden, it's not a hassle. They want to help you. They want to help your clients, and also selfishly, I mean, it's opportunity for them too. So when you're calling them, and it's an opportunity for them to get in front of your clients. They have the time, and they are a very valuable resource. So yeah, please don't hesitate to call any of them, especially on the rate thing, like Martin mentioned. I mean, it's you know, case by case basis. Just call them on any questions that you guys have from your clients.
Thank you, Chris.
Yeah.
Thank you, everyone. Everyone have a great rest of your day, and we'll see you soon.
Thanks for your time.
Thank you.
Bye.